Hi, welcome back, crypto astronauts. The whole market of stocks and equities is in a bear market. Crypto is also in the same position. We at BitWise understand the gloomy feeling of being underwater, but we also believe that the best opportunities are present during this period. In this episode, we will share some perspectives to help prepare you for the next bull run. Before we start, please support us by subscribing, liking, and sharing. We appreciate it, thank you. A bear market occurs when a market experiences prolonged price declines. Traditionally, it can be described as when the price of securities falls 20% or more from their recent highs. Bear markets are often associated with declines in an overall market, like the crypto market, but can also be connected to individual assets. For example, when Bitcoin experiences several months of downward price action, this can trigger a crypto bear market. While a dip in price can be daunting, especially for new users, there are opportunities in this slower and lower market phase. Here are 5 strategies on how to make the most of bear market times. Here's some key takeaways for this episode. First, learn about the 4 phases of crypto markets and their cyclical nature. Second, use downtime during the bear market to educate yourself and make informed decisions. Third, utilize in-app features to automatically buy or sell at your target price to time the market. Fourth, learn how to dollar-cost average (DCA), a popular strategy with documented success for traders with long-term investment plans. And the last, develop a long-term plan. We have a series of videos on above if you are interested to find out more. Understand that crypto markets are cyclical. If we take a look at the historic price movements of the cryptocurrency market, we see that a bullish period is typically followed by a bearish period. The crypto market cycle is generally defined by 4 phases: the accumulation, markup, bull market, distribution, and markdown, bear market, phase. Accumulation is the first phase of most market cycles. It starts after the end of the previous cycle when sellers have exited the market and prices are perceived to begin stabilizing. In this phase, the market volume is typically lower than average, as interest in the market remains low. Therefore, no clear trend emerges, and assets typically trade within a tight range. Commonly referred to as the bull market, the markup phase is when the market moves higher in price at an increasing rate. During the markup phase, new groups of market participants tend to enter the market, and with that generally comes a notable increase in volume at the beginning of this phase. At some point, after a bull run, some buyers become sellers. This is the distribution phase, where the buyers and sellers in the market are perceived to be at equilibrium. The markdown phase, or the bear market, can be the most volatile phase for most market participants. It starts as soon as the supply exceeds the demand in the distribution phase, and is a period that's fueled by fear in the market, as the outlook becomes increasingly negative. Use market downtime to educate yourself. A bear market is a time when you have the opportunity to learn more about crypto at a slower pace to set yourself up for the next bull market. With less FOMO, fear of missing out, than during a bull market frenzy, use this time to learn about blockchain and cryptocurrency, and do your own research on projects you are considering. Educational resources on our channel include social medias, you can absolutely ask me anything in the comment area, and research reports with deep insights for advanced crypto users. You can find more info in below description. Step away from the charts. While the market is volatile, FUD, the crypto acronym for fear, uncertainty, and doubt, can tempt us to stare at the charts day in and day out in hopes of executing an order at the ideal price. If timing the market is your preferred strategy, you might wish to automate the process. Many platforms feature allows users to sell and buy a cryptocurrency at their target price. Simply input the preferred parameters, and when they are met, the order will execute. Thanks for watching this video. Please support us till the end. We have a small bonus for you. Use dollar cost averaging to your advantage. Dollar cost averaging (DCA) is the act of purchasing an asset at regular intervals for a fixed dollar amount such as Rm100 every week. Research shows that over the long term, DCA can yield better results than trying to time the market. Users can conveniently automate the DCA strategy with the recurring buy function and purchase crypto on a weekly, bi-weekly, or monthly schedule. Instead of trying to time the bottom perfectly, users can lower their average overall buy cost throughout a bear market to position themselves favorably. Focus on the long term. While no one knows when a bear market will end, previous bear markets in both traditional finance (TradFi) and crypto have consistently been followed by a bull market. Many traders develop a long-term plan that is not influenced by short-term fluctuations in the market. It ensures they neither buy more assets than they can afford nor run out of liquidity when they would like to purchase. The highs of bull markets are exciting, just as much as the bottom of a bear market is daunting. These events can stir strong emotions, especially in those new to the crypto market. Keeping a level head both through the dips and peaks has proven to be a success. Conclusion: as much as things may slow down during a bear market, it's important to stay active, whether that be through DCA or taking the time to become more educated on different aspects of crypto. These are building blocks that can help you to succeed during the next bull run. As the saying goes, a quick buck can be made in a bull market, but wealth is built in a bear market when purchasing prices are low. Past performance is not a guarantee or predictor of future performance. The value of digital assets can decrease as well as increase, and you could lose all or a substantial amount of your purchase price. When assessing a digital asset, it's essential for you to do your research and due diligence to make the best possible judgment. If you are also interested in investing in cryptocurrencies and owning a piece of the future of money, I have good news for you. All you need to do is download the Luno app. Luno is the first cryptocurrency exchange to get licensed and regulated in Malaysia by the Securities Commission, so you're safe to use it. Once you have downloaded it, go to the reward section and type this unique reward code, NUB8XT. Once you do that, you can deposit and buy cryptocurrency. Purchase a minimum of 250 ringgit of any cryptocurrency, and you will receive a 25 ringgit reward of Bitcoin. Just make sure to key in the code before any deposit and purchase. I will leave a link also in the below description. Once again, a quick disclaimer that nothing in this video shall constitute financial advice. You are responsible for your own financial choices.